Shorting. Today's the basics of shorting. Understanding how it works, why we do it, what we're looking for on these plays. Actually, understanding how do we get paid from shorts. So, what is shorting? Short selling allows investors to profit from stocks or other securities when they go down in value. In order to sell short, an investor has to borrow the stock or security through a brokerage company from someone who owns it. The investor sells the stock, retaining the cash proceeds. The short seller hopes that the price will fall over time, providing an opportunity to buy back the stock at a lower price. Any money left over after buying back the stock is a profit to the short seller. Traders, I remember when I first started learning about short selling, I was so dang confused on what the definition was. It was like, how do we make money? How are we buying the shares, not now, but we're covering the shares and then buying it back to our broker? This is really all that you need to know. First things first is you make money as the stock falls. Very simple, very easy. But let's just think about it in this manner. If I buy a stock, right? I buy shares and the stock goes on up and I sell shares here. I make money from the difference. I make money if the stock goes from $1 and goes all the way up to $2 and I put in 1,000 shares. I bought at the price of $1 and I sold at the price of $2 with 1,000 shares. That gives me a $1,000 profit. Now, all we're doing is the same exact thing, only opposite. In this case, we are going to click the sell button first. When we click the sell button first, that is now giving us the shorts on this play. And if it falls down to $1, when I click buy, it is now getting me out of this play. Now, when this transaction goes to your broker, guys, okay, this is how it works. When your transaction goes to your broker, it will just flip it and basically say, okay, if you bought from $1 and went to $2, you got $1,000. But since you sold it at $2, then bought it at $1, that's going to still be $1,000. And yes, you sold it here and bought it here, but we'll just flip it around and say you bought it here and sold it here because it's still the same exact thing. So what we're doing here is we're buying second. We're shorting first. We're basically picking what's the exit price. What's the exit price first and then getting in at a lower area. So sometimes trying to figure out what's the definition of shorting is way more difficult of what actual shorting is. All shorting is we are betting the stock's gonna fall. And other than that, you don't need to do anything else with your broker. You click sell, you click buy. Even some brokers have the word short and cover. If you have your broker and it says short and cover, that's what you want to be click. Short first, cover second. So really how this works is short sellers borrow a stock from the broker, just like we paid $7 from Lightspeed on GameStop. Short seller immediately sells the stock on the market. Short seller buys back from the stock when again we hit the price that we want, and then we return the borrow shares to the broker. They flip it around and it basically shows a great profitable trade. So short selling, we jump in on the play at the very top, falls on down to the bottom. We make money as the stock goes. We bring it back over to the broker. They reverse our entry and exit. Boom, we make the difference. So it is allowed. It is legal. It is everything that we're doing is perfectly legit in the stock market. We are saying we are looking for a stock to fall because we do not believe that these plays are going to be holding up very well. So I talked about this a little bit yesterday, but why in the world would I ever want to short? Well, according to the U.S. Bureau of Labor and Statistics, the BLS, data from the BLS shows approximately 20% of new businesses fail within the first 2 years, 45% fail within the first 5 years, 65% fail within the 10 years, and only 25% actually make it within, again, 15 years. So the thing is, we know about 80% of new businesses are going to fail over time. And as I already told you guys, it does not matter what play you look at. Let's bring up CTNT. If we are referring to penny stocks, I go over to CTNT, let's just switch over to a weekly chart. Every single play is going to be probably fading and falling over time. CTNT was at $6 and faded and fallen, was all the way down towards, again, $1. Now it has a little bit of a pop at this moment, right? Let's take a look over on HOLO. HOLO was all the way up at $356. Now it's at $3. Let's take a look over on MAXN. MAXN was all the way up at $58. Now it's at $3. Let's take a look over on KOSS. KOSS was at $128. Now it's at $6. Let's take a look over on VUZI, was all the way up at $32. Now it's at $1. Let's take a look over on BIG. BIG was all the way up towards $71. Now it's at $4. Let's take a look over on TUP. TUP was all the way up to $66. Now it's at $2. Ladies and gentlemen, the stock market is just a huge marketplace of where companies are trying to get investors to give them money. That's all it is. The stock market is, let's put our business on here and hopefully people give us money. But guess what? For 99% of plays, they don't get money. You know who gets money? Apple, Tesla, Google, Microsoft. All these other plays just fade over time. All these other plays just fade and fall and get weaker. You have better odds making money on the downside than you do on the upside. We just looked at all these random plays. These are all just the top gainers on the day, and all of them are trash. All of them are falling over the last year, 2 years, 3 years. They just fade and fade and fade, which is why whenever we see a very nice spike, we know that that spike is not going to last. We know that that spike is not going to hold on up. Guess what happens, guys? It's so crazy. It's so wild. It's so nuts to me that every single day day, we see a whole bunch of garbage plays and traders say, what's the best play? What's the best garbage play? What's the play that's going to spike? Guys, I can't wait to... Why are we obsessed? Why are we obsessed with trying to find what is going to be the number one top gainer that goes from $1 all the way up to $100? Why can't we just say, hey, this stock's at $100 and we know it's going to go back down towards $1? We are obsessed with trying to find the stock out of 9,000 that's going to go on the upside, when we know nearly all of these plays are going to be going on the downside after these pops on it. These plays are going to fail. These plays are only up because of social media or, again, a press release that came out on that day, which is all hype related. I have shown you guys this picture a bajillion times that I will continue to show you. The reason how I've been able to make so much money in the stock market is just from basically realizing every play is built off hype. That's it. When you see these huge gains and you guys see these huge profits and you guys are saying, Deck, how in the world did you make 570,000? It's not me saying, okay, what's the best play out of 9,000 options and hopefully I nail that big time spike. No, it's waiting for the spike to happen and saying this play isn't going to hold. Let me just bet against it, right? Let me just bet against the play that I know that's not going to hold its gains. Let me just bet against the play that I know is not going to do very well. Let me just bet against the play that's probably not going to be able to hold up very well. That's all I was doing. I'm betting against the one that probably is going to give all of its gains right on back, right? So that's the idea about these stocks, that these are just not going to be able to hold. So let's get back into this. Let's take a step back. We are trading the penny stock market. These are not reliable companies, and 80% will go bankrupt in less than 2 years. Penny stocks run from momentum, not from financials. No one comes up to me and says, oh, Deck, are you shorting that play because it has a bad PE ratio? Are you shorting this play because it has, bad earnings reports? Guys, I'm shorting a play because it spikes up 200% on a day. The reason why, again, I get involved over on plays is because when I see a stock go straight up, most likely in the future, it's going to come straight on down. When I see a stock go straight on up, it's most likely going to be coming straight on down. When I see a stock go straight on up, most likely it's going to be coming straight on down. Take a look over on, again, GameStop, which is, the talk of the town right now, which everyone's looking at. You go straight up, guess what happens? You have a great opportunity of coming straight back on down. You go straight up, you have a great opportunity of coming straight back on down. Take a look at what GameStop is speaking to us. Let the chart tell us what we should do, right? Let the chart tell us. GameStop right here is in a weekly time frame, okay? So we are in a weekly time frame right now, GME, okay? Now, this W stands for every candle that we're looking at. Every candle is representing in the last 5 days of trading, from Monday to Friday. Now, if I take a look over on these, I can see on this huge candle, Monday through Friday, we spiked from here all the way up to here. But then the following week, we had a monster red candle after we formed this upper shadow. Then we also do have right here to right here, 5 days of climbing. We formed an upper shadow. Then the following week, we gave it all back. Then you guys can see from here to here, gave it all back, here. You guys can see the idea of what's going on. If GameStop over this next, let's say, few days, pops back up towards, again, $52, pops on up to $50, pops on up to whatever dollars, next week should be an easy short for us right back on down, because that's what has happened how many times? That's what the chart shows us. A lot of people aren't willing to read the chart and actually understand the chart. If you told me that every single time GameStop had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Guess what, the big short for myself is going to be? The big short for myself right here is going to be next week, I'm going to be able to make that money. Next week, I'm going to be able to make that cash. Next week, I'm going to be able to make that profit. Next week, I'm going to be able to make those gains, right? So I want to make sure every single trader understands when you look at these charts, these plays have a 9 out of 10 better chance of going down than they do of going up. But still, we're so obsessed with, oh, what's going to be the play that goes up? And that's what we have to get out of our heads. So you guys may have seen this picture before. Aerotime. Aerotime, what's this from? This is from, again, Wolf of Wall Street. Aerotime, what does he say? He says, Aerotime is groundbreaking pharmaceutical company coming out with huge expectations from blue chip companies. Are you with me right now? Right? It's like, this is what a lot of the penny stocks are. They are just 2 employees, 1 employee. It's, where's your office? Oh, where office is at our house, right? They don't even have an office space, which is why every time we see spikes, we have to realize these spikes are not going to hold their gains. Now, if we know this, that every single time a stock spikes, it does not hold its gains, why don't we always win? Why don't we always realize that this goes straight on up and comes straight back on down? Why don't we always realize that this goes straight back on up and this comes straight back on down? Usually the issue is the lack of patience. I see UONE start spiking very big. I see UONE starts going crazy, and then guess what happens? We say, okay, time to jump in, and it keeps going higher and higher and higher. Something that I've been working on over the past year, as you guys know, I haven't been shorting over the past year, taking a little bit of a hiatus off of it, is that I've realized that if you wait 1 week after the initial big spike on a supernova play, you have, what I've realized so far, over a 90% chance of success. You wait 1 week over on these plays. This is in a daily chart. 1, 2, 3, 4. There's a big time spike. Over the next 5, 6, 7, 8, 20, 30, 50 days, it falls all the way back on down. Here's again SPI. Monster spike. Guess what? It gave all of its gains back on down. Monster spike, guess what happens? It gives all of its gains back on down. So, you're already picking up on things. Number one, these plays aren't holding. Number two, they give back all their gains. Number three, they all have big, long upper shadows. Can you start seeing the predictability right now, traders? Are you guys with me on saying, wow, this is getting so easy, it's almost insane? Are you guys realizing, okay, I don't even have to find the number one top gainer. The number one top gainer is just given to me every day. Deck, how do I know what the number one top gainer is? Well, first things first, we all know GameStop's the hottest play. Or second things second, I literally just gave you my scanners, and it's just going to tell you what the number one top gainer is every single day. So it's like, Deck, are you kidding me right now? Literally, all we got to do at this moment is wait for the number one top gainer. We know if it's a crazy supernova, if we short it the next week, we're going to make money. And in most of these cases, if it's just like a 200% spiker, they're most likely going to come crashing on down within the same day. Yes, yes, yes. I'm literally giving you the answers. I'm giving you CTNT, most likely going to come crashing back on down. GameStop, best time to be able to short this one is going to be next week, as it is a bigger supernova. This play is going to come crashing. Why? Upper shadows, weekly chart, everything I'm going over. Let's stop trying to pick the 1 out of 9,000 to be the winner, and literally the answer will be given to us, right? We have it. We have it all set. Traders, you guys have seen my P&Ls. Over $500,000 in a year. I'm giving you everything you need here. So are these penny stocks really going to hold their moves? No. Someone find me one penny stock. Find me one penny stock that has ever spiked and kept going higher and 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 just kept going up forever. See, you can't find one. I knew it, right? So, hey, sorry, I'm getting a little carried away. Is there a play that maybe started as a penny stock and started building on up and became better and better and better? Sure. I could say Bitcoin, right? Bitcoin. But I'm not talking about Bitcoin or cryptocurrency, right? I'm talking about 99% of penny stocks. When they spike 200, 300%, give it a week for the hype to die on off. And guess what? People start losing interest. They do. Now, GameStop, AMC, maybe a little different. You know why? Because they do have that big follow, right? So I'll give that. That's a little bit different. But 99% of penny stock plays, people just can't keep their interest, because the moment it goes up, they love it. They turn it for a second, and then guess what happens? Everyone loses interest on it. And they say, okay, where's the next one? It's basically like we're taking advantage of the fact that there's social media today. We're taking advantage of the fact that there's so much hype in today's world. We're taking advantage that people can't stay focused on a play for more than a day. Guess what people do all day long, every single day? I'll show you right now. They go over to TikTok and they do this. They go over to TikTok and they say, oh wow, okay. Oh wow, okay. Oh wow, okay. Okay. It's like we can't watch anything for more than 10 seconds, it seems like, right? Every 10 seconds we scroll to a new video. Every 10 seconds. Like basically the younger mind is programmed to have such a short attention span. We're basically taking advantage of this attention span on the fact that people are not going to stick with the majority of stocks. These plays are going to come crashing back on down extremely fast. These plays are going to come crashing on down the moment that people start losing interest on. And that's what's so amazing. So let me ask you guys this question right now. Are you a trader, right? Are you this type of trader right here? Are you a trader that constantly buys in at the top? You see a big time spike, you buy in at the very top, you end up losing. Every time you buy into a play, it reverses on you. Every single time you get involved on these plays, they start getting weaker on you. It seems like no matter what you do, you just can't get it right. So why not turn that weakness into strength? Why is it every single time you buy, you lose? Well, how about every time you buy, you win now? Just bet the opposite way, that it's going to fall. Stop chasing and start shorting the highs. New traders rely too much on visual confirmation. I've talked about this before, but this is the number one sign of a weak-minded trader. Guys, I'm sorry, I don't mean to call you out in any sort of way if this is you, but I'm going to say you're a weak-minded trader. And the reason why I'm saying that right now is because I want you to be able to stand up and say, okay, you're right, you got me. If I saw a play, and I see this happen way too often, I see a stock, let's say ABC, whatever. Stock ABC comes out with positive phase 2 news. Positive phase 2 news that has reached endpoints. Something that's really good, right? That's a very good press release. You see this press release and you say, okay, that's a good press release, but I'm a little scared to jump on it. It may not move. And then it goes up higher. And you say, oh man, it's going on up, but now I don't want to chase because I know chasing's wrong. So it goes up even higher. And you say, oh, okay, hold on. I might get in. And it goes up even higher. And you say, man, this is going crazy. Okay, I'm buying in. And you buy in right here. And then it starts turning and dumping and falling. How many times has that happened? Guys, if that's the type of trader we are, let's just reverse that. Turn our weakness into strengths. Be the person that says, hey, if I'm late to the play, that's okay. If you're late to the play, that's even better because now you can get involved in shorts, right? So we want to make sure that we are understanding this, okay? Now, shorting is the same exact way as buying shares, traders. When we short 1,000 shares and it moves $1, right? We still make $1,000. If a stock goes up $1 and we have 1,000 shares, we still make $1. So no matter what, depending on your share size, I always go with like 1,000 shares, 2,000 shares, 3,000 shares. 1,000 shares, $1 up is $1,000. 2,000 shares, $1 up is $2,000. 3,000 shares, $1 up is $3,000. Same exact thing on the way on down, right? There's no difference between buying or shorting. You're making the same amount of money. So let me ask you guys a question right now. If I showed you already that the majority of plays are going to fail just in time, they're already going to go on down. And we already know that the majority of penny stock plays that are based off hype and momentum are just pumps that are going to be dumping on down. And that these plays are nearly every single time, if you give them 1 week, they're going to come crashing on down. And we have never even found found a penny stock that's ever gone from a penny stock and actually turned into a good, credible company. And we know that all these plays, all these traders have short attention spans and can't keep their attention on a play for more than like a day or two. It's almost like, why are we doing options again? Traders, let's think about this now. We already talked about all the reasons why we don't like options. We already talked about all the reasons why the odds are against us. We got to pick the right stock. We have to pick the right price. We have to pick if it's going up or down, right? We have to pick if it's going up or down. We have to not only pick though the strike price. Is it going up or down to this certain price? We have to talk about again the expiration date, up or down on the correct price to again this correct price before the expiration date happens. Then on top of that, we have to do it before again time decay takes on over. Then on top of that, guys, we have to be able to face all the other Greeks that we have, and again implied volatility. We have every reason why we are going to be a loser on a lot of our plays with options. Now on top of that, let's imagine if we're doing options on again smaller to mid-cap plays. Mid-cap plays, the ones that I already told you that are probably more likely to fail over time, and the ones that are most likely going to be pumps, and the ones that are more likely going to have that short attention span. And if you're not in right away, you're most likely going to end up losing. So you have all these reasons why you can lose in options, plus again all these reasons on the upside for again penny stocks. Really, it's just like you have every reason why you will lose. While on the opposite side, we're saying to ourselves, we have all these reasons on why we can win, right? We short, right? When we short, we don't have to pick, we don't have to face any of this. When we short, we don't got to face implied volatility or Greeks or time decay or expiration date or strike price. All we got to do is pick the right price that we think is going to go down. And on top of that, we don't have to face any of this. We don't got to face again, oh, is it going to last? Is it going to have attention? This company's not a good, healthy company. We don't need to focus on that in any sort of way. All we need to focus on is that this play is most likely going to go down over time. And guess what? You now are going to be a winner. All right. So happy trading, everyone. So pros, it is easier to find a stock later than it is earlier, right? Isn't it easier to find a stock later after it's already spiked on up than it is earlier? Nearly all spikes will crash as penny stocks are momentum based. It's extremely profitable if you can learn the tops. Cons, numbers go forever. Do not hold shorts overnight. Now I've talked to you guys about this already, okay? But they have changed this, but I would always double check with your broker. But this is the number one issue that people always get scared of. The number one issue people always get scared of with shorts is that, as we talked about, if we have a stock that's $5 and I buy 1,000 shares, right? Buy 1,000 shares. The most money that I can lose is it goes to zero and I lose $5,000. If they're shorts though, and I short 5,000 shares and it goes up to $10, right? I lose 5,000 bucks. But what happens if it goes up to $20, right? Am I going to be down $10,000 in debt? Well, brokers won't allow this anymore for the most case. People get nervous that, oh, what if I hold a play and it keeps going higher and higher and higher? Do I go into debt? Now, Lightspeed gets you out of your play. If you lose more than 90% of your account on a trade, on any trade that's up or down, they liquidate your account. And what does that mean? They basically say, hey, you know what? We're getting you out of this play, right? We're going to liquidate your account. We're going to get you out of this play because we don't trust you. So that's great that, your broker should be able to do that for you and that you'll be all set, ready to go. So you really don't have to worry about that. But there was a time that people were getting very scared, which was understandable. For instance, this was a story. I don't mean to scare you because you guys don't have to worry about this, but this is what used to happen. You could see this was back in 2015. And I actually remember trading this play. I was at this time, guys, a junior in college, and I remember the same exact play. It says, help, my short position got crushed and now I owe E-Trade $106,000. So his name is Joe Campbell. He claims he went to bed Wednesday evening with $37,000 in his trading account. Then again, later woke up and he was in debt of $106,000. What happened was the stock came out with news overnight. It went on a big time spike and he woke up and was in debt. So do you guys need to worry about that? As I said, no, your broker is going to liquidate your account, but please understand there is still a lot of risk with shorting overnight in case the stock ever has a gap on up, but it really is the same amount of risk on the same exact thing if you guys were ever buying a stock and it has a big gap on down. You can lose money on both sides. Both sides, you can lose money on the upside. Both money, you can lose money on the downside as well. Okay. So I wanted to make sure that you guys understand that and everything that we have going on at this time.